Hello and welcome to Looking at the Markets with David Modell. Going to talk about OHLC Bars. It's an interesting alternative to candlesticks or simple line charts, things like that. And I think you're going to find them really interesting. You might even choose to start using them in your own trading or investing. Before I get started, if you want some help with your trading or with your investing, if you'd like some help putting together a plan, because you really should have a plan, otherwise, you're going to have a lot of trouble succeeding in the long term. You can email me for coaching at davidmodell@gmail.com. Let's get into the OHLC bars. First of all, what does that stand for? OHLC, open, high, low, and close. You may have already seen Japanese candlesticks, and they give you the same exact information. Japanese candlesticks tell you where the price opened for that period or for that candle, where the price opened, where it closed, also where the high of that period is and where the low is. Okay, in other words, where it opened, where did the price start during that period? The close, where did it end? The high, how high did the price go during that time frame, during that period? The L, the low, how low did it go during that period of time? Okay, well, Japanese candlesticks tell you those four pieces of information. So do the OHLC bars, all right? But they're a little bit different just in the way they present this information, these four pieces of information visually. So the high and the low are pretty simple. You have call it a stick if you want to, okay? I like to call this the stick, and I call these the arms. I'm just imagining a stick figure without a head. Okay, and you got the two arms, the right arm and the left arm. That's what I call them. You can call them whatever you want. So you got a vertical stick here, and the bottom of the vertical stick is the low. How low did the price go during that period? Okay, and this is true whether this period could be 1 minute. Okay, it could be 5 minutes, could be an hour, 4 hours, a day, a week, a month. All right, just like with Japanese candlesticks, you have 1 minute and 2 minute and 5 minute and daily and weekly and hourly candlesticks. Well, you also have all those time frames for this. So this picture does not tell you how long this period is. That is what you decide on your charts. But within that period, whether it's a day or a minute or an hour or whatever, how low did the price go? That's the bottom of the stick, okay? How high did the price go? That's the top of this vertical stick here, all right? Kind of like with the Japanese candlesticks, it has wicks, right? You know, the bottom of the wick and the top of the wick tell you the low and the high of the period, all right? So what about the open and the close? Well, with Japanese candlesticks, you have a body, all right, which is like a rectangle. Oftentimes they fill in the rectangle with red or green. Well, with these OHLC bars, they're not going to fill it in or anything like that. So the stick is flat, there's no body, but they still have a couple of, I call them arms, all right? You have your left arm and your right arm. Now, if the price closed higher than it opened, then you're going to have the open, the left arm, down here, and the close arm is going to be higher than the open if it's an up day or up minute or whatever, period, right? All right. So if it's an up period, then it's going to look like this, right? It's going to be like left arm, and then you go up, and then right arm, okay? Open, close. Now, what if it's a down period, a down minute or hour or day or whatever? Then now the open arm is still on the left in both cases, and the close arm is still on the right. It's just that the shape's going to be a little bit different because the open is going to be higher than the close. So it's going to go like this, this, and this, right? See what I did there? Okay? Because the open's up here and the close is down there. So instead of an up day or minute or whatever going like that, it's more like this if it's a down day or minute or whatever. All right, so the shape kind of looks different, but the open arm is still going to be on the left side of the stick, and then the close arm is still going to be on the right side. All right, you kind of have to get used to it. Now, if you use, let's say, TradingView.com, you can use whatever platform you like. I'm just showing you TradingView because it's free to use right now, and everybody can look at it if they want to. So they actually help out a little bit visually, as you can see, and I'll make the bars a little bit bigger Unfortunately, they make the bars really, really skinny. All right, the lines are very thin. Other platforms, they're thicker looking. They look more like this. All right. So, but anyway. But one thing they do on TradingView that's really helpful, at least to me, is visually you can see the down periods are colored red and the up periods are colored green. Hopefully you can see them. Again, they're really skinny here. So that helps. But I've seen other platforms where they're all just black or they're all the same color. And so you kind of have to just look at the shape. Okay, you don't really need the colors. You can look at the shape. For example, notice that the shape of this one, and this is Apple stock 1 day, the daily chart. So each of these represents 1 day, but you could do this with the 1 minute chart, whatever you like. So notice the shape on this one goes like this, down, and that, right? Okay. So the left arm's up here, the right arm's way down there. And so even if this were not colored red, you would still know that it has this kind of shape and not this kind of shape. So you know it's a down day, a down period, all right, just from the shape, all right? And then you take something, I don't know, something like this one, right? We'll pull it over here, all right? So this shape, you can see the left arm is lower than the right arm. I know it's colored green, but even if you didn't see the color, you'd still know it's shaped like that. The left arm's lower than the right, so this is an up day, an up period. It's shaped more like this than like that. It's just a couple of examples, okay? So what's something you can look for? What's the advantage of this? Well, I don't know if it's really advantageous over Japanese candlesticks because, again, both the Japanese candlesticks and the OHLC bars give you the same 4 exact pieces of information, all right? They do not give you the volume, all right? You could put the volume bars down here, let's say, or something like that to give you the volume. But they both give you, the open, the high, the low, and the close. So let's take this one right here. You can see the open is the left arm, right? And then the low of the day was the bottom of the stick, all right? And then the high of the day was the top of the stick up here. And then the close is the right arm, which is up here. And the right arm is higher than the left arm. And so it's an up day, all right? That's just an example. Now, if the two arms were exactly the same height, that would kind of like a Japanese candlestick has doji candles, right? Where the price opened and closed at the same or almost the same price, okay? So you could have that here, all right? Kind of like this one right here. The left arm and the right arm are almost at the same spot, so that's almost like a doji candle. And that's a sign of indecision in the markets oftentimes. The trading community doesn't, they didn't know whether to go up or down, so it just opened and closed in the same spot approximately, okay? One thing you can look for, one advantage, is you can really see the shape here. For example, with this one, it's almost like you could tell that the price was maybe going to go down after this day, after this candle. Why? Because the close is near the bottom. It's near the bottom of not the candle, of the bar, of the OHLC bar, okay? So when it closes really close to the bottom, all right, then that could be a sign that the sellers are winning. The sellers are in control, and you might, not guaranteed of course, but you might get more down moves than you certainly did in Apple, okay, since this one closed near the bottom. There's very little stick pointing out below the close of the day. It closed at the low almost, right? A close on the lows is usually a sign, oftentimes a sign that the sellers are in control, and the next candles might be down, and this one, in this case, it certainly went down, as you can see after this one, down, 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 right? Okay? So try them out for yourself, see if you like them, and if you want more help with your trading or investing, you can contact me for coaching. I offer it. Contact me at davidmodell@gmail.com. Thank you so much for watching and listening. I will talk to you again soon.